The broader question, Mr. Kamath, and you already weighed in on this, is a feeling that we need more banks. And I know this feeling has persisted for a while. We've experimented with the small finance banks, the payment banks, and now there is two levels of talk. One, as you already weighed in on, corporates into banking, or large NBFCs converting into banks and having access to a wider deposit base. Do any of those two ideas sort of resonate with you again at this juncture, given where we've come from in our banking system and where we need to go?
See, again, I heard the governor say that this is not the Reserve Bank's view. This is a discussion paper which has been prepared by an internal working group. But this is an internal working group's paper, and it has been now put out for discussions. Let me put it that way. I think we have to respect what the governor says and live within that construct. But thoughts, this gives a scope to thoughts, and various people have given their views. At one end is the view that this raises governance issues, and at the other end there have been views that time is right. I would pitch it as follows. Clearly, we need more lending institutions which are able to support the aspirations of a 5 trillion economy and beyond. That's point number one. And extant institutions will have to grow at a pace which maybe the regulator could end up being a little uncomfortable, because you need to grow significantly fast to do this. B, you have a sector, the non-bank finance companies in India, which are lightly regulated or regulated lighter than the banks, which the regulator wants to make sure continue to provide the support and not become a systemic risk, or as they become systemically important, that risk increases. So they want to address this. I think these are things that any regulator is absolutely correct to think about. Now comes the issue of who then will be these new players who will push things forward. I think clearly the NBFCs become a set of candidates, and the larger ones are out of these for sure. Others, the paper puts out that these could be private enterprises which could become the promoters of these banks. Another interesting point that has been made in the Reserve Bank working group paper. If you look at the banking sector as a percentage of GDP, it is 70% in India, whereas it is 170% in China. Now, what the point that is being made there is that to grow at our aspirational growth level, you need the banking sector to play a more significant role in the overall context. Point number one. Point number two, I think that has been made very clearly there, is that if you look at the existing structure, capital, access to capital has been far better in the case of private banks, because they could go and raise money in the market, whereas as far as the government banks are concerned, they had to access funding from the government. The point has been made in the working group. The third, they talked about utilization of capital, which again they say is better in the private sector. And fourth, the operating ratio, which again they feel they have put out, is better in the private sector banking space. So all this has been given as a preparatory or the environment to banking in the paper, and based on that, they have raised this thought that would this be the right time to allow entry of new private players into the space. Then comes the important issue that a lot of people have raised. Will this raise a governance issue? My simple submission here is, a few years back, certainly there could have been questions, will it raise a governance issue? And there are several key things that have started to happen, which I think today probably addresses that fear of risk, that fear of that risk. So let us look at one of these things. Do you have the ability to take a consolidated view of the system and its borrowers? 3 years back, I would have said no. Today, you have a consolidated view of the borrowing by a corporate across all banks. Now, aggregating this, if it is a borrower, you can now aggregate all the borrowers, and within that, I think it's a small step then to code them to see which set of borrowers are from which group or entity, and then again look at the movement between banks to fund these entities. And think it becomes much easier today in the technology context, given where we have moved on to address this concern. I'll give a small example. Isn't CIBIL tracking on real-time basis every single payment that you and I do? And isn't the system better for it? Today, a retail borrower think twice before he is going to borrow beyond his means and get a negative score. I would think that good behavior will also come about once it is known that on real-time basis your transactions are being tracked. This is one. Second is, I think the Reserve Bank has very clearly in the working group paper said that there would need to be internal strengthening of internal processes and supervisory. Indeed, they would do that. At the end of the day, what will happen, as I see, is you will have a system which will be supervised and monitored in a much tighter manner than it is today. At that point of time, the Reserve Bank has options to allow the type of players they want, and they believe they can properly supervise to deepen and widen the system.
So, sir, absolutely. Access to data, and if that public credit registry comes into place, then that gets taken a step further. On the governance side, so they've made some changes. For instance, in compensation at the bank CEO level, they've done some changes at the board level. But if one had to again, sort of reinforce the governance structure beyond just the access to data, do you think the board level reforms can still be taken further?
Again, I saw a paper which was, I think, put out early this year or last year, and I didn't study it in detail. That was on risk management and other aspects of how a bank should function. I think the steps brought out there are, I think, very appropriate. They may need fine-tuning. That's up to the Reserve Bank to think through after it, probably discusses and understands. But to me, the steps are very timely. Because from an external point of view, the 5 years that I spent abroad, where I find the whole thought process is now moved in the context of banks, is greater responsibility for audit committees, greater responsibility to the internal auditor, and greater responsibilities to the compliance function. Now, if these can be tightened, significantly, as the Reserve Bank wants the banks to do, including the reporting structures for functionaries under these, in these functions, and B, I would say, overlay technology into these functions, I think we are into a much better system, where we should then not fear that, is there a governance issue that is lurking somewhere behind us.